Hello, everyone. Welcome to another session of Financial Accounting in the Wisest King Academy. I am Don Solomon, and it's always a pleasure reaching out to you with a new video. Today, I am going to be solving a complete question, right? Using the indirect method with lots of adjustments. That's cash flow statements. So please, if you're new, do not forget to subscribe to the channel. And if you find this content useful, please give me a thumb up. If you're watching from Nigeria, I greet you. Gabon, Congo, Ghana, Tanzania, Malawi, Kenya, you are highly welcome. Namibia, right? You are highly welcome. Please share to others, right? So that they can join their family. Now, let me read the question. The following are the summarized balance sheet of one PLC as at 31st December of the last 2 years, as 2014, 2015. We have fixed assets, we have land and building. If you look at the value of land, there have been an increase. We have plant and machinery, office equipment, and we have the total. We have current assets, stock, debtors, bank and cash. Then we have liabilities less than 1 year, that's current liability. We have creditors, we have corporation tax, we have proposed dividends. Now we have net current asset, which is like the working capital, which will be add to the non-current assets. We have what? Net asset, also called the capital employed. Now, finance bar, we have capital and reserve. Now, if you look at capital, we have ordinary share capital of 1,000 francs CFA each. We have that of 2014 and that of 2015. Now we have a revaluation reserve. There was no revaluation reserve in 2014, but there is a revaluation reserve of 240,000 in 2015. Now we have profit reserve. Profit reserve, there's actually an increase, and there is a profit and loss, which is actually retained profit. Now, very important, additional information. During 2015, machinery costing 234 million francs was purchased. There was no disposal of machinery. Office equipment with a book value of 9,600,000 francs was sold in 2015 for 7,800,000. Wow, book value. It means that there was actually a loss on disposal. This has been replaced by a new office equipment that cost 22,800,000 francs. Now, during 2015, there was a bonus issue of one ordinary share for every 5 already held. This was done by using part of the share premium. So if we go back up, let's look at our share premium. We will look at our share premium. We look at our share premium, you will discover that there have been a decrease in share premium. At the beginning, we have 576,000, but at the end, we have 168,000. So there's a decrease. And now you can see there's an increase in capital. At the beginning, it was 2,040,000, at the end, is 2,448,000. But now, this decrease in the share premium, it was not outlined in the additional information. The first thing that has to trigger my mind is that the increase in capital was made in kind, thereby converting the share premium to share capital. Okay, that being the case, let's dive straight into our working. How do we start with the working? Start with the additional information. Now, during the year, machinery costing 234 million francs was purchased. There was no disposal. So the first thing we prepare here is machinery account. Machinery account. So we have net book value for 2014. The net book value for 2014 of machinery is 648,000. 648,000. Then we have net book value for 2015 is 695,520. Now we have purchase, that's cash, of how much? 220, 234,000. That's 234 million, which is 234,000. Please, three zeros are summarized, right? If here we have depreciation, which we don't know, is the missing figure we have to calculate. They spoke to us about disposal. Now, the disposal here will take the net book value. But what was the asset disposed? There was no asset disposed. So we look at this account. This balance must balance. It must balance. We have 0, 0, 0, 2, 8, and 8. That's 882,000. If I'm not making a mistake, yes, that should be it. So we subtract from it 995, the 695,520 will have the value of our depreciation. So we take 882,000 minus 695,520 equals to, it means our depreciation for the period is 186,420. 480, sorry. So that's the value of our depreciation. This is an operating activity. Remember, this is an investing activity. We are done with the first additional information. Now let's go ahead with the second additional information. We are told that office equipment with a book value of 9,600,000 was sold for 7,800,000. So we have proceeds on disposal. Proceeds on disposal of equipment. That's 7,800,000. Right? Now, net book value of equipment disposed. The net book value of the equipment disposed is 9,600,000. So there is a loss on disposal of 9,600,000 minus 7,800,000. So if I take 2, 12, 1,800, that's 1,800. But let me calculate it here. 9,600 minus 7,800. 1,800. So there is a loss on disposal of 1,800. This is going under operating activity. This is going under investing activity. Very, very important. Now, we don't know the value of depreciation, so we need to prepare the equipment account. Equipment account. Now we have net book value for 2014, net book value for 2015. We have depreciation, which we don't know. We have disposal, which is actually the net book value. Disposal, which is the net book value of the asset disposed. We disposed for 9,600. Now let's get the values of the value of office equipment. 2014, 165,600. 165,600. 2015, 132,000. 132,000. But we have a purchase, right? It says this office equipment was replaced. So we have a cash. That's how much? 22,800. 22,800. So this must balance, and the difference will give us the value of depreciation. So 165,600 plus 22,800. 188,400. 188,400. 188,400. So we subtract from it minus 132,000. minus 9,600. We are going to have 46,800. That's the value of depreciation. 46,800. Very, very important. So we are done at that level. And now let's look at the value of land and building. Look at the value of land and building. If you look at the value of land and building, at the beginning of the period it was 2,112,000. At the end is 2,352,000. Let's take the difference and see something. 2,000,000, 2,352,000 minus 2,112,000. It gives 240,000. And now, if you go under the equity section, you look at the valuation reserve, you see the 240,000 there, right? 240. So the revaluation reserve is a capital reserve. So it's not money. So it does not affect the determination of the net profit before tax. Okay. Now the last additional information here is that during 2015, there was a bonus issue of one ordinary share for every 5 already held. So it means that the number of bonus shares will be equal to 1/5 times the number of old shares, which is 2,040,000. Remember that 3 zeros and the nominal value per share is 1,000. So it cancels. So we have 2,040,000 shares. So if we take this divided by 5, we will give the number of new shares. So 2,040,000 divided by 5. That's going to give us 408,000 shares. This is it. So it means that if we take 408,000 now, we want to take now the total shares now. Total shares 2,040,000 plus 408,000. That's going to be plus 2,040,000. 2,448,000. So you see shares. If you multiply by 1,000, you have 2,448,000,000, which is actually the share capital for 2015. That is in 2,448,000. And now, if you go down to the share premium, if you look at the share premium, you discover that there was a decrease in the value of share premium. Let's get the decrease. 576,000 minus 168,000. That's 408,000. 408 million, which is actually the value of the bonus shares. So this bonus issue was just made by converting the share premium to share capital. So there was no amount that was received for the share premium. Now, the next thing we are going to do is to determine our net profit before tax. Determination of the net profit before tax. Let me call it X. Now, to the net profit before tax, with less corporation tax, less corporation tax. And the tax will be the tax for 2015. What is the tax for 2015? We take it under current as liability. Under current liability, corporation tax 2015, that's 56,000. With 57,600. 57,600. We subtract. We have our net profit after tax. That's going to give us X minus 57,600. Now, add retained profit for 2014, which is brought forward to 2015. Add retained profit 2014. Let's take it. Retained profit 2014 is you take profit and loss, which is actually 218,400. 218,400. So the difference, the total that will give us what was shared. So we take 218,400, 218,000 280,400 minus 57,600. It means we are going to have 160,800. 160,800. Now we less. The first thing is the dividend. The dividend for the period is the dividend for 2015. So dividend for 2015. Dividend for 2015 is actually 380 proposed dividend, which is 78,000 sharp. 78,000. And we also have a profit reserve. Profit reserves. Profit reserve is just, you are just going to take the difference. That is 218,000. Sorry, 154,200 minus 94,200. 154,200 minus 94,200. So there's a round figure that takes 50,000. 154,200 minus 94,200. 60,000. So this will give now our retained profit for 2015. That's going to be, hey, please, this will be plus Excel. So look at it, we are going to take 160,800 minus 78,000 minus 60,000. So it will give us X plus 22,800. So this is our retained profit. And we know this value in our statement of financial position. X plus 22,800. We have our retained profit for 2015, which is 175,200. 175,200. Right? Okay, so if I take this one this way, it becomes negative. So X will be equal to this minus this. So I take 175,200 minus my answer. So it means the net profit before tax for the period was 152,400. So we are done with the adjustments. Can we go straight to the preparation of our cash flow statement? Now, this is one PLC cash flow statement for the year ended 31st December 2015. 000 francs CFA, 000 francs CFA. So we have operating activities. We start with our net profit before tax, which is actually our X, which we have calculated. We have a 152,400. 152,400. Right? We carry out adjustments. Now depreciation. Now the various depreciation that we had depreciation of machinery that's 186,480 plus we had depreciation of equipment that was 46,800. Land did not depreciate. So we'll add those two. We also had loss on disposal. Yes. Loss on disposal of equipment. Loss on disposal of equipment. The loss on disposal we added because it reduced the profit in the income statement. So we have, okay, let me calculate this total. So I take 186,480 plus 46,800. That's going to give me 233,280. So So if I look at this plus 1,800, it gave me 235,080, which when I add my operating profit before working capital changes will be C plus 152,400. That's going to give us 387,480. So I go straight now to changes in working capital. Changes in working capital. So I'll take current assets, our stock debtors. Let me start with stock. If I start with stock, 2014, 99,000, 2015, 84,440. So there's a decrease. And decrease, stock. The decrease stock, we have 99,600 minus 85,440. So this one is going to be a positive. We have debtors, there is still a decrease in debtors. 61,920, 61,920 minus 53,640. And now let's go to accounts payables. That's creditors. Creditors, there's an increase in creditors. Increase creditors. So the increase is going to be 78,000, 74,520 minus 64,080. Okay, we have this. So all of them are positive. So all of them are positive. So we have 99,600 minus 85,440. Come to 14,160 positive. We have 61,920 minus 53,640. 8,480. And lastly, 74,520 minus 64,080. 10,440. Can go over 40. We add that plus 8,280 plus 14,160. It's going to give us a total of 32,880. 32,880. So this is net operating cash flow. Net operating cash flow. So if I take plus 387,480, 387,480. I'm going to have 420,360. Now, I now less corporation tax paid. Corporation tax paid. And the tax paid for 2015 should be the tax of 2014. So the corporation tax paid will be the corporation tax paid under current liability, that's the tax for 2014. That's going to be 49,200. 49,200, which will subtract the balance there is our net cash flow from operating activity. Come on, let's get that. So say minus 49,200 equals to, that's going to give us 371,160. That's our net cash flow from operating activities. Now let's go to investing activity. Remember, in investing activity, we are looking at movement in non-current assets. So in non-current assets, there are three of them. There's land and building, plant and machinery, and there is equipment. In land and building, there was no movement. In plant and machinery, there was actually a movement of purchases, and in equipment, there was a purchase and there was a disposal. So let's go to investing activities. Investing activities, we have purchases of NCA. The first one is machinery, and the next one is equipment. So purchase of machinery is 234 million. 234 million as negative. Purchase of equipment is 22,800. 22,800,000. Now we have proceeds on disposal. Proceeds on disposal of equipment. Proceeds on disposal of equipment is 7,800, which is positive. So that is all. So what is our net cash flow from investing activities? So we are going to take 234,000 plus 22,800 minus 7,800. So that's going to give us negative 249 million. 249,000. 249,000. Now we go straight to the financing activities. In financing activities, we discover that the increase in capital was not in cash, it was in kind. So we have nothing to do there. Was there non-current liability? There was no non-current liability, right? Yes, there was none. And it therefore means that the only thing in financing activities was dividend paid. And the dividend paid in 2015 is the dividend for 2014. The dividend for 2014, you can take it under current liabilities. Proposed dividend 2014, that's 96,000. That's negative. So we have net cash flow from financing activities 96,000. So if I add all, I have my net cash and cash equivalents. What is my net cash and cash equivalents? So this is gonna be plus 96,000. That's giving me a negative, right? So minus 71,160. So that's going to give me a positive 26,160. Please, let's go back. Let's take the difference here and see if it does. Look at here, we're going to have cash in hand at the bank. Wow. This is 76,920 minus 50,760. 26,160. Wow. So it's balanced. So let me come down and say add cash and cash and cash equivalent at start. The cash and cash equivalent at start is 50,760. 50,760. That's gonna give me cash and cash equivalent and close, which is actually 76,920. 76,920. You can see that it has balance. So this is a complete work example. As you can see, you can follow step by step. The question is going to be, the link to the question will be sent, and notwithstanding, I'll still crop the question and put on the screen and I'll be reading. Thank you very much for watching. I hope you find this video useful. Please, if you have any question, you can ask on the comment section. I'll gladly respond. I'm so happy to have completed this course on cash flow statement, both the direct and the indirect. I hope you find this useful. Please, no matter where you're from, Nigeria, Ghana, Kenya, Nairobi, South Africa, Sudan, please subscribe to my channel. From Sierra Leone, from Malawi, please, Ethiopia, please subscribe to my channel. Share to other students, right? And please give me a thumb up so that YouTube can recommend the videos to others. Thank you very, very much, and God bless you.